Well, thank you so much for tuning into the journey with Christian D. Evans podcast. As always, we have freaking amazing guests on. We like to do cool shit with cool people, and we got some cool people on today. Please welcome the managing partner of Space Station, Tim Holladay. Tim, how you doing, my man?
Dude, Christian, doing great, man. So pumped to be here today. Thanks for having me on. This is awesome.
Dude, I love what you got going on, man. And before we dive into all the cool things you got going on, I want to unpack a little bit of your background, your story, man.
Yeah.
How'd you end up, at Space Station, managing partner, doing some cool investing and stuff like that, man?
Yeah. No, I mean, it's funny because not at all like a traditional VC path. Like I'm a guy who got a degree in engineering from Arizona State University. I grew up in a small town in Arizona. Just my parents owned a Dairy Queen, just kind of the small town thing. But after school, worked in software and then started to try to build companies, because truly built and bombed a couple companies. I mean, just absolutely just didn't get it figured out, but learned a ton. And then I went back to some corporate stuff. But, so about 20 years of that, building and bombing, but then built and ended up selling a company with my brother, who now is my partner here at the space station. So we've been working together for 10 years, kind of in the trenches. And that's, again, even coming to the space station, there wasn't a thought of, hey, I'm going to go build a venture firm in Layton, Utah. We're going to invest in 107 portfolio companies. We're going to be, kind of a prolific, consumer investor group. None of that thought. But fast forward, some years, here we are. That's what we built.
Out of, because you came from engineering and software, how did you get into the CPG industry, man? What's that jump?
Well, I mean, so look, there isn't any kind of logical jump at all. It's although I will say that in all cases, both in the companies that I worked for and then the one we ended up building and selling, it's all in this kind of the consumer space. So consumer broadly defined, right? Just things that humans interact with, not necessarily companies, B2B. So I definitely kind of worked in that space, but in terms of investing, I think it was quite serendipitous. If you'd like, I can give you a little bit of the come up of kind of Spacestation Investments and how it fits here to the space station, because it's a bit unique. Like the space station is it's a group founded by a creator, by an influencer named Sean McBride. He goes by Shonduras. He was actually one of the top guys on Snapchat, kind of back in the heyday of Snapchat. And his friend Casey Neistat, kind of big YouTuber guy, Snapchat turned YouTuber, said, "Hey, Sean, you got to move to YouTube to kind of monetize, be successful, build a real audience." So he did. And when he made that jump to YouTube, right about the time that my brother and I sold our company in Arizona in 2016. So my brother, whose name is also Sean, so because they're both Seans, my brother goes by Holladay, Sean McBride goes by Shonduras. My brother joins just to kind of be the business guy, right? Shonduras is uber creative, super cool, vibey, skater guy, turned YouTuber, turned creator, influencer. So my brother jumps in and starts helping run the business of a YouTube channel, which I was had no idea how that works. And now it's pretty wild to get in under the covers there. And as they're building out, they started to realize hey, this is working. But instead of just riding off into the sunset with the Lamborghinis and the second houses, they decided to build in the creator economy. And first it was an influencer marketing agency. Then it was, and even today now, that influencer marketing agency works with some of the top brands, top creators, and just puts together opportunities for both brands and influencers. We have one of the top esports orgs, like professional video game players and organization called Spacestation Gaming. That, by the way, we just about a month ago took home the world championship in Halo. So competitively, we're the top in the world there. But we play Rocket League. We play a bunch of other games. I'm not at all a gamer, so I am not in that world. But my teenage kids think I'm a lot cooler because I'm at the space station because of it. But where we get to come in, Christian, is we had an opportunity to invest in this little company called Magic Spoon. Mm-hmm. It was a friend of ours who's now our partner said, "Hey, you guys have this influencer marketing agency. You guys live in the creator economy. You have these successful YouTube channels," which, by the way, those YouTube channels today, I mean, we do hundreds of millions of views a month. We have these two channels, Sean and then his daughter, Adley, just really great family-friendly content. Anyway, he's like, "You guys should be investing in early stage companies." He was an angel investor. He got us into Magic Spoon. Magic Spoon is a high protein, like no sugar, low carb cereal. So like cool cereal for adults. So this is like the end of 2019. So we just cut a little check off the balance sheet to then like see what we can do to be investors. Again, no intention. I had just joined the space station to work on a software project, like nothing to do with anything. But I tell you what, man, like we really went to town trying to be good little strategic investors. So we seed out a bunch of product to our friends and homies that just happen to be people that have audience. We, ran their influence marketing for a while with our agency. Well, this is the end of 2019, obviously moved into COVID. During COVID, Magic Spoon became one of the fastest growing direct consumer companies of all time. I mean, just on an actual tear. Because what's happening? Bunch of middle-aged guys like me sitting at home like, I've got to get this gut under control. I've been sitting at home eating all day. I better change my Lucky Charms for a little bit better cereal. And that is what got us pumped on investing. When they came back to raise another round of funding, we saw that they were internally just a rocket ship. And we're like, you know what? Maybe we could do this. We sat around a table, Christian. I kid you not. We're sitting around our conference room table. They looked around the room and said, all right, we're going to go deeper into Magic Spoon and we're going to start investing in other companies. Tim, you're the oldest dude here. And at the time, I'm 39 years old, oldest guy here. Maybe you should be the right guy to help us build out this investment group. And the rest is history. I mean, then it was like Olipop, Slate Milk, Oats Overnight, Grassa, like all this better for you food. Then we transitioned into like health and wellness with Oura Ring and Hyperice sports performance and momentous supplements. We got into, we also invest in B2B companies that support e-commerce or support kind of a creator economy. Web3 and crypto in 2021. This year alone, we've invested in everything from like AI, ad tech and customer service to 2 fertility companies, which is really rad. And just recently finishing up an investment in the best yogurt you've ever tasted. So we get a look at a lot of cool stuff, man. It's awesome.
Dude, and I think what is interesting about, we were talking offline, you guys have a very operational approach, specifically in the marketing and sales department with these companies, your portfolio company. And you mentioned Magic Spoon, and I'm so glad you brought that up because, it's right now, from the research I saw, it's roughly at a $400 to $600 million valuation, which is, of course, if you got in early, that's pretty decent,
Yeah.
I'm curious though, when you were, because I want to double click on this, because I found consumer products specifically, you and I were talking about, it's very capital intensive, right? And then also you got to, the margins are pretty tight, and you really got to know, like, you got to know your numbers, right? Very, very deep level. It's not like SaaS where you have some, level of room of error, right? This is pretty tight business. So I'm curious, when you're underwriting the company itself, were you just like underwriting the team? Were you just underwriting the product? Were you sitting there going, man, shit, I just love the team and this is awesome? Because like you said, you followed on with another round, but it wasn't until they had like proof of concept established. So early stage though, you were like, let's just see what happens.
Just go for it. I mean, look, we are an early stage venture group in every aspect of the term. Like we're pre-seed, seed stage, kind of pushing up into Series A. So we're investing at the earlier stages. And at those early stages, I mean, it is like our number one criteria and kind of diligence is the founders, like the founding team. Like what are they about? What kind of humans are they? We feel like over time we've kind of learned to have a little bit of pattern recognition as to the type of human that is geared toward building a consumer company, which, by the way, is not every human. I think all of us can learn amazing skills, but there's just something a little different about these founders in general that are building companies, but consumer is another beast. So that's our thing, Christians. Like we got to make sure that we can check the box that they're the right person. Gabby and Greg with Magic Spoon, easy to check that box, right? But then from there, like we have to be excited about the product. Like we invest in companies where we are proud and excited to have them in our portfolio, and that the product itself is, like doing something for the world, right? I mean, but then third though, really is, what's the progress? What's the progress? Where are they at? And although we have invested in a few, and again, over 100 portfolio companies, a few pre-seed or super early, pre-revenue, pre-product. We've done only a few of those. And by the way, in every case, it is experienced founders already exited, working on their new thing. Again, that founder box is checked. Most of the time there's some level of revenue, some early indications of product market fit. But at Magic Spoon, I mean, they were crushing, but it was still early, man. Like, it's still early. So there is definitely a thought and feeling of, we have to be able to underwrite like that this whole thing is going to work. We don't know for sure. It's not completely written in stone that this is going to happen. And that's a tough thing for any investor. And we have to live with that every day.
Mm-hmm. I want to ask you, when you're working with these portfolio companies, there's different approaches to this. There's obviously the retail aspect, getting on the shelf, and then also direct to consumer. Now, the direct to
Yeah.
consumer, from what I've understood, is it's still very difficult. There has to be a minimum, average cart value to be able to offset the shipping and handling and so forth. So you have to kind of, structure that out. And sometimes, depending upon what structure you are, what product you're selling, you really got to dial that in. And then on the retail aspect, this is what I find so unique about the retail. You got to really do a lot of marketing still, because people are going into, they're getting distracted by all these other brands, all these other different products. You really got to be like able to stand out on the shelf, do different retail structures behind it. And then you mentioned something where you bring in a lot of influencers. And I think this is kind of a cool competitive advantage if you're able to understand this. You and I, we were talking about like my influencer experience. It's like, wow, dude, it's tough out there. So
Yeah.
but you guys are able to dominate the shit out of it, which is really cool, because that's where you guys are able to have that competitive advantage, right?
Yeah.
So I want you to just walk me through a little bit the way you think about, okay, you look at a portfolio company and you say, all right, we're gonna go ahead and deploy both of these strategies. We're gonna go retail and direct to consumer, and then also maybe integrating some influencers to drive traffic to both of those.
Yeah, I mean, to be clear, like our group, our strategic value is exactly what you said. Like we are good at influencer and influencer marketing. We actually don't craft full marketing campaigns. We're not kind of helping them with their overall marketing strategy necessarily, although we can give some thoughts and hints. We say, look, when you're ready to and want to include influencers as part of your strategy, that we're the team. And obviously for consumer brands, most are just like, look, we just got to move the needle. Retail, direct to consumer, we got to move the needle. Influencer marketing is fascinating. It's kind of like this interesting unknown thing, like, paid ad strategies, SEO marketing, like that's decades of proven track record, as well as like very formulaic kind of approaches. It's like, I put in this amount of capital into Instagram, Facebook ads, I'm going to get this much return on my ad spend. Influencer does not work that way. And so they're definitely looking for partners to help with that. What we do is twofold. We have an agency internally, very successful, and they can help our portfolio companies at reduced fees, can help them grow through influencer marketing, just as we do for brands that are not portfolio companies. But also, because today we're an angel group, so we instead of being a traditional VC where we've raised a round of kind of a round of a fund and we deploy out of our fund, we get excited about an opportunity. Spacestation always puts a check in and we invest, but then we put that out to a group of investors, hundreds of investors, that then can choose to join us or not on any of these deals, and we round up our capital that way. That group of investors includes guys like you, guys like me, trying to build stuff, trying to do things, trying to find diversity in what we're investing in. People that have sold their businesses. Some of our portfolio company founders, many of them invest with us. But it also includes these creators, right? These influencers, these YouTubers, pro athletes. We have a number of Olympians in the group, right? And so we help bring them into the round as investors. And now it's a little bit different. It's not just a pay to play kind of creator brand relationship. It's that plus, they're an investor. Therefore, there's a lot more kind of magic that happens and love that's shared that way and helps move the brand even better, including like these creators come with some really awesome ideas for these brands. Like, hey, what if you tried this? How about this? And how about that? And that helps. So that's our focus. We, though, work with brands that are on kind of different levels of, you mentioned really the main two markets are channels, direct to consumer and retail. You can also add like Amazon is almost like this other kind of channel that, is many treat as a separate bucket. But on those two fronts, on direct consumer and retail, we don't just invest in brands that are direct consumer only or have a really strong D2C. If they are very heavy retail and they built that out and they're crushing that way, we look at as, hey, we could actually help boost your direct consumer. If they come in at very heavy direct consumer, Magic Spoon, for example, all D2C when we invested, we know we can just amplify. So in both cases, we can work on it. But you're right, Christian, like both strategies and both channels they're both hard, by the way. Like they're both hard. It's, on the direct consumer side, you just got to get in front of people, and it's just tough to do, harder than ever to get in front of humans. And then on the retail side, you have to get people in the door and excited about your brand. And it's not just about, you're right, like I see it on the shelf, I'm going to impulse grab this thing. Most of the time, they've seen it elsewhere. And when they walk into the store, they see it, they grab it. So both have the same motion, get in front of people. And that's tough to do. And we just try to add our kind of small part of that equation. And then it's fun to watch our brands develop their strategies over time and figure out, what works best in retail, what works best in direct consumer, and just how to optimize both of those as early stage companies with limited capital. It's pretty awesome to watch.
Yeah, one of the things that I feel like you guys have been able to really articulate is being able to bring in some of those influencers as equity owners of these companies. You and I were talking offline. I dealt with some influencers, not as much as you have, but my fair share. And what's interesting to me is what always concerned me is in these agreements, they just wanted just a base salary or base, per post or whatever the result you're looking for, and there's no performance structure associated with it. And the reason why I always think that's concerning to me is because interest aligned, right? This is one of the reasons why investing there's carried interest, and sometimes you waive the management fee because interest aligned with that fund or with that investor, whoever it is that you're co-investing alongside. And to me, that just makes financial sense. But one of the things you've been able to, like I just said, is articulate bringing in these small influencers or large influencers with a decent sized check that they're equity owners. What's that? How do you structure the conversation or structure the package or that deal so that it's mutually beneficial, right? Because at the end of the day, when you're able to find those synergies, it's a win-win, right? That influencer's like, dude, I'm going to post all day, every day about this product, be creative in doing this because it's going to drive revenue. And now all of a sudden, as it drives revenue, it's going to increase my valuation of that, equity percentage. And for the right, influencers, they understand long-term, they understand, hey, guess what? I get a percentage of this over the whole game of it. So I'm curious, what does that conversation look like, or how do you structure that to make sure that it's the most impactful?
Well, it has been interesting over time to kind of develop how that works. I will say this, and look, for better, for worse, right? Like we're not purporting to be, having kind of a monopoly on the market of how to do this. There's other groups that do this very successfully, and large and small. We just have found what works for us. What works for us is to not craft a deal where the creator is paid, or I shouldn't say paid, is invest with influence. So there is no equity for marketing services in our deals. We have just found that is it's tough for both the brand and for the influencer. If they over deliver, the influencer feels like they kind of maybe gave too much, didn't get enough equity. If they under deliver, the brand feels like they got cheated out of some equity. And so it's just tough to do. So what we have found is like the round of funding is the round of funding. The market has marked this deal, and the influencers invest like every other investor. So that's important to us, actually, that they're putting in cash like anyone else. And if they do nothing more, if nobody does anything else, they've invested like everyone else on the cap table, and that feels good. That feels equitable and fair to everyone. Now, let's say that we do that deal, we sign, wire, close, the deal is done. That's then when we get to work, right? Now we get to work. Now what you have on your cap table as a founder is some handful of people who are now invested. They actually put in real cash. It's done and wired. And they have like this incentive and desire to help you grow. So now let's work stuff out. And the way that looks varies. Like, in some cases it is, I mean, look, I'll be straight up, like some of the people that we work with, some of the creators, like their rates, the rate you talk about, that kind of, base dollar amount to engage with them. I mean, $30,000, $50,000, $100,000 per engagement, right? These are high-end creators that are used to, that's their model. That's their business model. That's how they get paid. So when we work something out, it's not always, hey, I invested, therefore I'm going to give you $500,000 of free effort. there is some opportunity cost there for them. So we find the balance. We find the balance there that makes sense. And in some cases, these creators really swing hard for the brands, which is really cool to see. Like they really get behind and they do way more work than what they would ever get paid for because they get that vision. But one quick comment, Christian, is and this is something that's kind of like a personal mission for me and for our team. Maybe by definition or default, most of the creators, athletes that we work with, they are brand new to investing in general. These are not sophisticated investors, and I mean that with love and respect. Not slamming them; they're not sophisticated. These are sophisticated humans, just not investors, right? They just have not yet, been cutting checks and putting money in Robinhood or anything else in the market. That's just not the thing. A lot of them. It's just like it's new money, and that's great. That's great for them. They found something that works. We get to be their first venture check in many cases. And that is kind of an exciting thing because there's like an education component. We get to help teach them, what does it mean to invest in an early stage company? Like, what's it mean when I cut a check into this company? What's going to happen? Am I getting a monthly return? Do I not get any return? Is it 10 years? All these kind of questions that a new investor might have. And also kind of contrasting that to investing in like public stock, for example, or investing in real estate. Like we're helping them find where our very specific niche, piece of early stage venture investing, which is niche, it's high risk, high reward. Where should that fit within their overall investing kind of thoughts? And that's fun for us. And that lets us kind of work out with them what makes sense, both from like just pure investing as an investor and then also working with the brand.
Yeah, I love what you said in regards to structuring it. They're coming in not as sweat equity, where hey, look, we post X amount of post, then I get X amount of result equity or whatever. It's saying, hey, look, you write a check, you get equity, and that's it, and it's just simple as that. Now, all of a sudden, as an investor, just like you're coming in as influencer manager or operational approach. Same thing. You want to add value to your portfolio, right? Your portfolio companies in that kind of a way. And so, how are you going to do that? Well, the way you can add value. I think that's a really cool, interesting approach. Yeah. I want to ask, because we were talking about this offline prior to this. CPG is a very unique animal, right? Yeah. Sometimes it's not the big $1 billion, several $1 billion exits and these crazy multiples and, all this, like, for example, I was talking to a friend of mine earlier today. They bought Klarna at $40 billion valuation in 2020. And it dropped down to $10 billion valuation. And so now they're sitting there going, I mean, they're still do okay, you know what I mean? Like they'll return money, but I mean, holy crap, dude. But anyways, you were saying something, and I don't know if you're able to share your DPI numbers, and that's okay if you're not. But you mentioned offline that you said you had some healthy DPI, right? And I think the way you see this CPG industry is a little bit, it's a unique, and I think I loved your perspective on it, where it wasn't like. I'd love for you to just share that, and then, of course, dive into it a little bit.
Yeah, I mean, this is. I mean, we're learning about this in real time too. Again, prefacing this with like, I'm not some 40-year veteran in this stuff, right? It's like we're learning how to work with today's modern CPG brands and how they work and operate as a business. Here's what I've learned. What I've learned is traditional investor mindset, especially venture investor mindset, is. You got to be doing B2B, SaaS. You got to be doing AI, because that's where you're going to get these multiples. That's where it's going to happen. CPG, consumer. I mean, don't even fool with that. In reality, though, what we have found is that, entry to market or kind of cost of entry of a B2B, 3 guys in a garage writing some software or AI. And again, I'm a big software guy. We've invested in a ton of software, not disparaging. Lower cost to entry, higher potential upside, also a lot easier to just die, right? Whereas you get a CPG brand who they have taken on $10 million of capital and are at $30 million of revenue. Like there's like a stability there where it's just harder to kill them. They can just hang in there, and there is a surprisingly robust exit for them. Not public, right? Not IPO. There's a robust private equity market which has heated up in the last 10 years. And then there's very robust strategic M&A. I mean, the big CPG companies out there, right? And you can name the Nestle's and the Mondelez and, of course, General Mills, these guys. I mean, they're their innovation strategy has really evolved to let these awesome founders build. Let these early stage investors invest. Let's see if they can get to a certain point, and then let's grab those. That strategy has worked out great for them and for early stage investors. So CPG has a robust return profile, but it is typically not measured in billions. And that's the thing that just everyone's like, well, then I'm not going to get involved. I'm not going to invest. But here's what I've learned. And this is both from like our own personal, what we get to see on the inside of these companies, and just the market data has shown that, in a lot of VC guys, I don't know why we use like these baseball analogies. Like everyone's looking for that home run. And all you need is like a grand slam out of your 30 companies in your fund. You need one grand slam to return the fund, and you're set. 130 banger, 30x, 140x, and you're set. And that's true. That math does work if you can get that to happen. Most are going to die. Half will give you 1 or 2x. In the CPG world, it is a lot of doubles, some triples, maybe a little home run with one on the base, maybe a couple singles. But that adds up to be an incredible return for our investors when it's all said and done, and for the founders. So we have seen and think in the next few years, it'll play out that many of these CPG companies will find an exit in the 100 to $800 million range. That is sub 1 billion. They're not these unicorns, but that because they haven't also raised a Series C or D, and they're just way down the line on capital, their actual return profile is incredible for investors and for founders. I think there's a robust economy there that we're a part of that is really attractive and exciting to us. Now, if we didn't have the strategic value we have, if we didn't have the connection to the creators and influencers and athletes, if we didn't have an internal agency, yeah, I'd probably be indexing into AI and taking those wild bets. It's already high risk, high reward. Might as well take a bet on some wild AI company. But in our world where we know well, we just feel like there is plenty of return profile in this kind of like, I don't know, what do you call it, like middle market M&A and private equity play.
Yeah, and that's why I thought it was a really interesting approach, because like you said, as long as you're getting those consistent, you know, again with the baseball analogy, first and second base, and all of a sudden you just keep doing that, and guess what, you end the game with 13, 14 home runs or whatever. And so I think and that's why I think it is a unique approach to it. Holistically, where capital flows, it's very interesting to me, because on a macro, it's always these hot, sexy trends. And in 2020, 2021, it was crazy. Evaluations were nuts. Wow. Everybody was just pouring it in,
throwing cash.
And I think, and I think even after this election, we're going to start seeing even more activity. It's going to be unique.
Agreed.
So, but holistically, CPG has been on the lower end of the spectrum of industries where money has flown into it. I'm curious, because I was talking to a friend of mine that they run some cool companies in their portfolio, specifically in Europe. And Europe is an interesting market because there is this constraint of not as much capital. Yeah. And when you don't have as much capital, then you can't like raise a crazy round and just keep pouring money into it. So to me, I look at it as business. It's a healthy constraint, right?
Yeah.
Because now all of a sudden you have to figure out, okay, how do we be profitable? How do we actually sell a product, actually make money?
Exactly.
And I'm curious, do you feel like that also is a factor in the reason why, CPG, it's not as crazily funded, or capital doesn't allocate toward that industry as much compared to AI and tech? And do you feel like that is a good constraint to have, where these companies have to figure out, okay, how are we profitable? We got to really track our numbers, et cetera, et cetera. Curious your thoughts on that.
There's some kind of a factor when it comes to like the funnel of CPG companies being built, right? Like you can literally have 1,000 AI companies spin up with, people kind of in there at home, starting to build things out. But the top 10 will get funded, or actually in the case of AI, it's like, the top 100 of those 1,000 will get funded. And then of course it just funnels down to the very, very top cream of the crop. I think with CPG, the barrier to entry is just so much higher that itself is a nice selection kind of mechanism we have found, where, you just don't I shouldn't say you don't. It's very hard. We got to talk to a couple of companies this week that like bootstrapped a CPG company into, multi tens of millions of revenue. It's like, that's insane. It's really impressive. very rare to bootstrap something like that. Capital it's more CapEx heavy, and there's less of it to go around. That's exactly right. It's not as frothy. It's not as hypey and vibey. So because of that, yeah, like these CPG founders, they either just never get started or they're just a little bit more resilient, and they have to be capital efficient. Now, there's also kind of this, maybe a little bit more disciplined approach to CPG than there is AI today because of the froth. And by the way, we're looking at tons of AI companies, so we live in it, we get it. It's like back in 2021, if you were kind of anything in Web3 crypto, you could just literally raise whatever you wanted, and we saw that and lived that out in real time. Today it's AI. Throw AI on the back of whatever you're doing, man. I got this new protein cookie. It's an AI cookie. I don't know, like it's just amazing how it's working. And again, I'm not mean to troll the industry. We live in it. I think that capital constraint, like you said, Christian, that actually is a feature, not a challenge to these founders. It just does make it harder for an early stage and new founder to get started. I wish I could bring up this graph, but there's like this graph that shows the amount of capital that is invested in the private markets in all these different categories: technology, infrastructure, AI, B2B, and then consumer. And on the private side, and then once they go public or somehow get to public, either through M&A and now they're part of a public company, then what's the capital stack look like? How much capital is invested in these companies? And in most cases, technology, it is like just straight across the board. This much is in the private, this much in the public. And it kind of, consumer is one of the only ones that has a disparity. The amount invested in the private is like a third of what it is on the public side, meaning less capital is going in on the private side, but the outcomes are it's just off balance, are much more, and much more capital is going in after they go public or after they're part of a public company. We see that as an opportunity. We see that as like, there's not enough capital going into consumer. If we put more capital in, we will get more great companies out of it. That's what we think.
That's a unique way of thinking about it. I'd love to look at that graph and maybe even put that up on here. So yeah, send that over to me because I'm very intrigued with it.
Yeah, really
cool. So I want to ask you also, because you mentioned earlier on, like the impact aspect, and what is so unique about this. And I was talking to another friend actually today as well. Today's been crazy busy.
Yeah,
and we were talking about BCIs, brain computer interface, we're talking about Neuralink. We're talking about some other companies we're underwriting. And what's interesting
almost got a check in a Neuralink. Almost, we were close.
Oh, there you go. Almost. Well, talk to us. But what's interesting to me is we were having this conversation. I said, look at the result of what this is able to do. Yeah. And I understand the timeline, maybe 4, 5, 6, 7, maybe even 10 years. Yeah. But the outcome and the application and the impact, if we're optimizing for that, is going to be remarkable. And that's what I get excited about is when we're looking at companies, I also have a lens on the power of the impact of what you're doing and deploying money into an idea, a vision of some sort. Yes, it's about return. Yes, it's about money. Yes, it's about bringing in some money and being able to go buy our yacht, whatever. But also, I think the importance of impact. And you mentioned, of course, some of the companies you guys are looking at, not just CPG, but also you mentioned fertility and things like that. Yeah. How much does impact influence your decision when you're looking at these companies? And I'd love for you to just give us some examples of some moonshots, right? Some space, some moonshots that you decided to deploy capital into, but you saw the impact of it.
No, that's I appreciate bringing up this point because it's really important to us. Obviously, got to return capital. That's kind of the economics and the mechanics of how this works. If incentives aren't aligned, to your point earlier, it's just things aren't going to work. So if investors aren't getting returns on these deals, it's not going to happen. As much as it might change the world for the better and all that, that's just how the reality of how the world works. But when you're able to find and invest in companies that you actually really feel make a difference, there's just like there's a joy and an excitement about what you do that comes through in the excellence of actually getting the returns. Like it kind of like, it's like this really cool virtuous cycle, I think. And we've seen that. And by the way, it can be at all different types of scales. For example, Oura Ring, incredible company, got in not too early, but early enough that's going to be an incredible return for us. It's a sleep tracker ring. It's a ring that just kind of tells you how well you're sleeping, helps you identify, it's got this tech in it that helps you identify, your sleep patterns, and when you're getting how much deep sleep, how much REM sleep. It's become a very widely kind of accepted, like, yeah, it's a good thing to track our sleep. That's exciting and impactful, we think, to health. It's one aspect of health. It's one aspect, but they're really changing the game in that one aspect. We have another portfolio company, very much kind of on the cutting edge here in terms of its progress and where it's going. Very seasoned, exited founders, building a company called Phi, which will change the way that we manage our health by pairing AI with inputs from all kinds of wearables and surveys, basically what we tell it is going on in our lives and family history, bring all that in together and turn that into very customized treatments, supplements, eventually down to like a daily, like, Tim, you slept like crap yesterday. Here's some more zinc, to kind of help you out, or here's some whatever. Here's some magnesium or whatever you need to kind of help you tonight. Like that type of very closely connected AI plus health, plus the actual something to put in your body that's incredibly bioavailable, the way that they're doing it, proprietary kind of blend and so on. So there's that type of thing, and then there's like ones that like are just kind of fun. Magic Spoon, it's cereal, right? Like there's other options for breakfast. If you felt the cereal wasn't doing good for you, don't eat it at all. But they're saying, but cereal's awesome. So like, let's make it better. And it's better when you get 12, 14 grams of protein in what feels like Fruit Loops. You're pretty stoked on the day, right? And is that having an impact in the world? You could argue that compared to like fertility, but I would argue that in its own little world, it's doing a great impact. I will end on the fertility. So two really cool companies. One's called Bea Fertility. This is basically giving couples an option before IVF. In vitro fertilization, very expensive procedure for those who are trying to have children and just cannot conceive. You go to IVF, it costs, they say on average to have a successful birth, $66,000 in the US. And it's kind of like, what's in between that? Like between I'm having a hard time to IVF, like there's very little options in between. They've developed both a delivery mechanism, a device, as well as like they're developing a whole platform where couples can approach Bea at the beginning of hey, we're gonna let's start to have some kids. What can the guys do? What can the ladies do to kind of get their bodies in the best shape? Then let's try. If you're still having a hard time, here's a device that helps with the actual kind of fertilization, with everything working. And if that all doesn't work, for, by the way, a few $100s, not thousands, tens of thousands, then IVF's an option. So there's that type of thing. The last one I'll end on is just so fun to talk about. This company is non-hormonal male birth control. Male birth control. Okay, so the guys on the guys' side now. So the ladies are doing the pill. They're doing IUDs and these other kind of methods. This is a device, a procedure, 10-minute painless procedure that essentially creates a filter in the vas deferens of the guy. That's what delivers the sperm. Puts a filter in there that just stops it from delivering for 10 years. And then 10-minute procedure, and you turn that back on just like that. Flip flop. You're just being able to kind of turn the factory on and off. The company is called Plan A, which is brilliant. Kind of a play on the Plan B situation. And these guys, this founder, Fox, and some others that are working on this, some of the top medical minds, they are truly going to impact. I mean, that's great for guys like me who are done having kids. That's an option. For early, younger couples who are like not ready to have kids. Great option, actually, great option. No hormones messed with, awesome. But also like developing countries, that's one of the biggest challenges is unplanned pregnancies. Over 50% of all pregnancies are unplanned across the world, and so there's some real impact on health and wellness as a country or as a planet with companies like this. So yeah, it's a blast to work on, man. It's really fun. Let me show you one thing, Christian. My brother got this for me because I talk about it so much. On my desk is a little Hot Wheels DeLorean, right? Classic time machine DeLorean. And because I always tell people, and this is like I feel like it's such a privilege for me and for us, guys like us and people that get to do what we do, is I feel like every morning I wake up, I get in the DeLorean, I dial like 5 years into the future, I get there, and then I talk to the founders and the people who are building the future. This is what you're alluding to before. Like, we get to see people who are building our future in fertility, in AI, in software, and in consumer. And then we get to come back to the present and try to place those bets, try to support them, fund them. You work with creators and influencers to help them get known, try to work with retailers to get on shelves, and whatever that is, to make that 5-year vision a reality. That is an incredible privilege. It's a blast. It's very hard to work on. It can be scary for many. It's high risk, high reward, but I wouldn't have it any other way. Absolutely love it.
Dude, and the impact is huge. I want to loop back on what you said with the fertility. So those other different kind of strategies. So correct me if I'm wrong with the plan A. Let's talk about plan A. So I would imagine, is that subscribed through the doctor? Because would you have to get the health insurance companies involved with that? Or, because that's a hurdle. Or would that just be more of, on the counter kind of approach?
Yeah, I mean, so I don't speak for Plan A, of course. Just a little disclaimer there, and they're still kind of working on and getting through FDA approvals, and there's some really good movement there. So they're going to be a couple years before they're available in the U.S. and elsewhere in the country or in the world. The idea, though, being, in the case of a guy like me looking for a permanent option, Plan A can be a great thing. That'll just work through traditional kind of vasectomy kind of male health clinics, no problem. In the case of Plan A, they actually have a patented delivery mechanism, a little device. I got to see it with myself just a couple weeks ago. That is a delivery device that ensures that the actual gel that is inserted into this vas deferens, this little tiny tube in there, is getting inside to the right place and delivers in the right place. That's obviously critical, that it's like you got to actually deliver the gel into the right place for this thing to work with like 100% accuracy. That delivery mechanism opens up the door for this to not be some super specialized male, healthcare provider, specialty doctor to do this. It will eventually be your family physician who you can walk in and say, I would like to have this done. They kind of double check, make sure everything's cool, and they can administer that and kind of essentially control that birth control with just a healthcare provider, which I think will be really an important unlock, certainly in the U.S. and elsewhere.
It's so unique because when you're able to lower the cost of it and, of course, allow it to become more available, now all of a sudden, and I'm we don't want to get into politics, but, the conversation around abortion, where if you're able to, be preliminary and do preventative measures, now all of a sudden that conversation is basically just pulled off the table and we're talking about preliminary, preventative measures instead.
Look, man, here's two dudes on the call here. This puts the responsibility more on our shoulders than was in the past, and that's a good thing. Like, this allows the guys to step up for the first time when it comes to birth control and kind of managing your family and how that works without messing with hormones. That's just, I think it's just such an unlock. It'll kind of level the playing field, and it should have an impact on some of those very hot political topics for sure. Yeah, we're pumped on it, man. It can't come fast enough. That's a really exciting company for us.
Dude, Plan A, I love it. And of course, the other one as well, prior to IVF, because I have heard some conversations where, you have to be in a good financial status to be able to even afford IVF or obviously even adoption or anything like that.
It's covered,
it's a process.
Out of pocket. It's wild. Yeah, 100%.
Yeah,
it's a good one.
So let me ask you this. So, because one of the things that I'm always intrigued with is, we always talk about U.S. deals, and I'm a big believer in there are some very unique things that are happening outside the U.S. as well. And I'm talking emerging markets. I had a conversation earlier this week around India, and probably 2013 14 and 15 and 16, India wasn't where it was supposed to be. But now you're looking at just a few years later, you're starting to see, okay, now they got the foundation, they got a lot of the things going on.
Sure.
You even see Latin America, which I was not aware of, all that kind of stuff that's going on there. Some big money, but also some really interesting deals. Obviously, you have Europe. Europe, not as sexy. I wouldn't really even call it emerging market. But what I find so unique is that if you look beyond the U.S. borders, you see some really unique founders and ecosystems. And coming back to India, India has almost a 10-to-1 population. So I mean, if you're able to hit like 1 or even 5% of that penetration of the market, I mean, you're talking several $100 billion companies that could be developed if they get their things right. So when you're looking at international, well, first of all, is that some things that are top of mind for you? And how do you approach the international? Maybe just not even outside of space station, but maybe privately.
Yeah. I mean, for me, I agree with everything you said in terms of potential opportunities and just some incredible founders that are building, especially like building natively where they know their market, right? They know their setup, the demographics, they know what works. I think that's insanely powerful. It's one thing for, maybe a US based company to try to build something for India. It's another thing for an Indian founder to build. And that's exciting. I think it's great. Our deal flow has not led us into having really great access yet internationally. I mean, we definitely have some access and we look at some deals, but not nearly as robust as I'd like. I would love more exposure to those opportunities, and very much welcome to look at those as they come across our plate for sure.
Mm-hmm. When you're coming back over to the U.S., the market and so forth, I'm a big believer that, of course, you have to be convicted on the deals that you're doing.
Yeah.
And that may be, when you find a winner, you want to defend your position, right, with other investors. And I want to ask how you approach that when you see a winner, when you maybe had a small check, maybe like, of course, Magic Spoon's a perfect example.
Yeah.
You guys went ahead and increased your exposure to it. You obviously defended your position, et cetera, maybe even added on to it.
We did.
How do you think about that when you're looking at, say, hey, this is a winner, and how do you approach that? What are your thoughts on that?
The follow-on for us is interesting because we're not a fund, we are raising a fund. 2025 we should have a fund raised, which allows us to have a very kind of defined thesis around follow-on. We're going to reserve 30% of our funds to follow on to the winners. As an angel group, it's a little bit different. What ends up happening is we have a winner, a Magic Spoon. We know it's a rocket ship. They're coming back to raise some more capital. Everyone's excited. What we end up doing is, if they allow us to, and what's really kind of cool and I think unique about us as an angel group, we have no business, by the way, in many of the deals that we're in. We just really have no business being there. You're not going to find many angel groups in kind of the A, B, C rounds, in those growth rounds where other venture firms are following on and diving in. But because we bring the strategic value, like they just love having us involved. So that's really such a cool, aspect of what we built out, is that we in almost every case have been invited to follow on with our pro rata. So at least as much as our pro rata, and sometimes super pro rata. And that's great. So we do get the opportunity to follow on. But what ends up often happening is we put it back out to our group. Hey, here's Magic Spoon now. Those that have invested, do you want to double down? Go ahead. But now we get to grab those who have joined our group since our first investment at Magic Spoon, and they get to then put some cash in. So as a group, we get the opportunity to put more capital in, but we're not able to have a strong thesis around it because we don't have committed capital. It's rounding up these SPVs and this syndicating these deals. We will have, with our fund, a thesis around follow on. That's also a nuanced game, man. Like, you're right, it's a nuanced game. It's of all of your portfolio companies, it's like, which ones are really working. You have to kind of not just look at amongst our portfolio what's working. You have to be able to step outside of your own portfolio. If you just compare them against each other, you're going to find yourself in a bit of an echo chamber. And for better or for worse, I mean, that is likely not going to be the best decision-making process of comparing your own portfolio companies. You got to look at the market and see which are performing against the market. That's what we'll end up doing as we do our follow-ons, to see if we can identify what's working, And then hopefully we've negotiated pro rata rights to even have the ability to do so, the ability to put in more capital, which is not an automatic thing. You have to kind of make sure you have that negotiated upfront.
So one of the things that I was just talking to a founder of mine, we were looking at taking exposure to this company, and we're very impressed with. We have high conviction of it. But one of the things that has helped us in our strategy, and I'm just saying this because I find this very interesting, as it kind of aligns with what you're doing in regards to follow-ons. We decided to obviously put some certain metrics or hurdles that need to be hit before the whole amount is allocated. We're also big believers in the way we structure some of this in a debt to equity structure, convertible note. And that kind of mitigates our risk. Definitely if it's something of, we're highly convicted in it, but also the reality is this company has a high risk, right? And so, we've come to realize, well, we're not just going to write you $1 million or $5 million or $10 million check. We want to make sure that there are, we see some improvements, we see some North Star direction, if you will, before we start.
When do you establish that? Like, are you establishing that? Let's say you're investing in the seed round, and you'll have an opportunity to follow on in an A round. Are you establishing in the seed round, like, look, if we see these metrics hit in 12 months from now, 8 months, whatever, 14 months when they're raising, then we'll follow on? Or are you as you get closer to that round? I'm actually kind of curious how you think about the timing of establishing those benchmarks.
Yeah, a lot of times it's really the conversation with each founder, and every founder is drastically different.
Yeah, for sure.
So like this one example specifically, we said, look, okay, we want to have, we see a lot of conviction in this. We see you're a 2-time founder. You've had a great exit. The cap table is very, very clean and very sexy as well. There's some amazing high caliber investors on there. So we understand that this could be a big, big deal. The thing is, we said, look, we'll allocate 10 million. The thing is, we'll do 2.5 million now. And then over the next 3 months, once, it hits FDA and what that looks like, then we'll do it, about
the rest of the rest, or another tranche or something. Okay.
Another tranche, correct. And then, and then a little bit more afterwards.
Yeah,
so again, everything is contextual, but what's also interesting is that they were perfectly fine with it. And I said, we can move fast. And I think that's one of the biggest things with these founders is like, hey, let's not make this a 3-week process. If you're a check writer, let's make it happen. Let's go. And so it is interesting, but that's why I was just curious on the way you structure this stuff, because it's, definitely on follow-ons. I've heard some where, I'm a big believer cash is king, and when you're in a situation where it's like, oh man, we missed out on this opportunity because we just weren't liquid enough. And you never want to be in that situation. And I'm curious, because we got a few more minutes. Has there ever been a time, and you don't have to mention the company or anything, but has there been a time when you saw an opportunity, you're like, dude, if we could have just maybe you just focus on some other deals, or maybe you just got lost in transition or whatever, but we missed out.
Almost every time, man. Because when you're an angel group, almost every deal, when you get to that conviction level, we put in our check. And there's definitely times when we put in our space station check and then we look back a year later, like, why did we not 10x that? Of course, like that's very common to think that on the winners. But it's like, dang, I mean, what I wish we could have tripled our allocation into that round. They were going to give us all we could take, and we're a very much a strategic investor. And so we're like, last check in, hey, we got 300K left in this round, but we'll oversubscribe if you have more interest and whatever, and we'll go run our process. Our average check today is like 300K. Like, we don't write huge checks yet. Again, another reason for raising the fund, to be able to have more committed capital. And so what ends up happening is, we are so pumped and convicted. We put the deal out to our group. Maybe we didn't do a good job selling it. Maybe they didn't see what we see. Maybe just whatever market conditions. The group just doesn't perform that well. We don't round up as much capital, and we're super bummed on it. But we move forward, and we know that they'll eventually see the light. But then on the next round of funding, we get another chance. Valuations, 5x, and it's like, okay, we get to mark it up for the early money, but then that next round is different. So that's why, man, like, we're actually really excited to get into your shoes of being able to have committed capital where we can allocate the amount that we really think is appropriate. And even then, I'm sure there will be, it's always the case, on your actual kind of, triples and home runs, when you look back 12 months, you're like, yeah, we should have doubled and tripled at the time. But look, a $1 million check into an absolute rocket ship is obviously better than a 500K check or no check. So it's like, be pumped on the million you got in. Yeah, bummer you didn't put in 3, but you got to play the field, in the moment of play. You cannot beat yourself up. You have to learn from the past, but you just got to keep going, looking forward. I mean, it's like the time machine analogy. It's like you got to get in the time machine every day. You cannot look back. It's got no backwards going back into time on this machine. You just got to keep going forward.
Yep, and there's always another deal. There's another opportunity. There's whatever, and you just jump into those. And
it took me years to learn that. I used to get so like FOMO, just like, oh, we're gonna miss out. We're not gonna be able to get in this deal, or we only got 200K on this deal. Like, this is the worst. And then I realized, then the next month, just an absolute banger comes around. And you're like, geez, man, this is incredible. And the good news is, being an angel group, we get to benefit from the other side, which is, in theory, I mean, like almost like unlimited cash in a way, right? Meaning, we can just keep spinning up and keep putting out to our group. And if they keep performing, we can pull the capital together. There's no kind of maximum amount. And fortunately, most of the deals that we do, they're raising a $2 million seed round. They give us as much of that $2 million as we want to take, which is really, really cool. That's a unique privilege, because there's a chance that we're going to bring in some crazy, influencer creator. And they're like, well, keep it open for Space Station. And when they're done, then we'll fill the rest with someone else. And that's a great place to be for us.
Well, 100%. You guys have a good, strong brand. And so it's incredible what you're able to do when you have a very strong, it's the same thing when you have like, the Peter Thiel Foundation or family office or Bill Gates on the cap table. You're like, okay, this must be a good investment or something, Yeah, exactly.
Wow. We're still working on it. I appreciate that. We're still working on it. We have a lot of work to do, but it's been a blast to build. A lot of challenge and stress. And 2021 was so frothy that 22 and 3 felt weird. And this year's been kind of crazy, but again, we still are finding amazing. At the end of the day, it all boils down to, like, we have these coins. I've got them behind me. I won't reach back and get it, but we have these coins that you can kind of see them, that we give to our angel investors when they invest in a deal. We actually mint a coin of that company. We give it to them. They display it in this cool little box. They love it. And on the front of the coin is the brand. On the back of the coin is our brand. And we have, etched in this metal, it says, surround yourself with good people. Very trite, very straightforward kind of concept. But truly, we try to remind ourselves constantly, whether it's amazing guys like yourself jumping on a podcast or just chatting about the market, whether it's our founders, our investors, our admins, our Utah, US support, whatever it is. It's just, when you align and surround yourself with good people, it tends to work amongst all the challenges that will inevitably come. Just surround yourself with good people. And when you find people that are just having a hard time with, or things are weird, that's a pretty good flag to be like, nope, not our deal, not our founder. There'll be another one. There'll be another deal. We've had to kind of fire investors, in our group, like people that were hard to work with. It's like, you know what? I'm so sorry. This is opt in. We're opting you out. And when you surround yourself with awesome people, things overall tend to work, even with challenges in the middle. We found that we're trying to live that ourselves, trying to be that kind of people as best we can.
Yeah, Tim, it's the best experience when you sit there and say, I don't need your $5 million check. I don't need your whatever $1 million check. I want to work with cool people, dude. I don't need you. You know what I mean?
That's a privileged position, because there's many times we're like, but I would like it though. I would like your check, but I know that
without your attitude,
it's
right?
10 years of dealing with you. Maybe not. So, yeah, that's it.
And I love that coin idea, because I was in the Air Force, and so we got that airman's coin, and so it was one of those things where it's like, the pride of it, you know what I mean? Like,
it's based on the challenge coin concept. And it's a little bit of like a funny. I actually found one on my desk. A little bit. This is like a cool Spanish. This is a Spanish only online bank. It's really cool here in Utah. But on the back, I can't
get it forward because
it'll blur. Yeah, the good size little coins. They've got a little weight to them, and it's just kind of a memento, but also a reminder of what we're doing and what we're building. It's fun. Good time.
Dude, I love it. I love the energy, man. I love it. That's what it comes down to, building the culture and building amazing relationships, Tim, it was such a pleasure having you on, man. And how can they reach out to you and connect with you, my man?
Yeah, love to have people interact with us, and for those that are we've been actually quite closed with our group so far, as like those that can join us in investing with us, but we're finding amazing benefit in just opening up more and more to people who are interested in access to early stage ventures. So you can talk to us. If you're a credit investor, talk to us about investing with us. You can either just email me, Tim, at spacestation.com, or investments@spacestation.com. And then you can check out our portfolio at spacestationinvestments.com. So reach out, love to chat, and see how we can work together.
Awesome. And I'll put all those links down in the description there, guys, for everybody.
Yeah, please do.
But Tim, truly a pleasure,
Amazing,
of course.
Christian. Thanks for what you do, man.
Thank you, man.
We just got to talk. We got to keep talking. We got to keep teaching and learning.
I know.
I'm a podcast in my ear constant kind of guy, just learning. I love, and often I'll get on these calls get on these podcasts and be like, how cool that these people are taking time out of their own life to talk to others and get this content out there basically for free. So thank you for what you do, because honestly, like it actually adds value. My 18-year-old son is looking to get into the industry, and my first thing I was like, bro, put something in your ears and just start learning and listening. So good work on your side, man. It's good stuff.
Appreciate it, man. I appreciate being on here, guys. That is my guest, the managing partner, Space Station, Tim Holladay. Guys, thank you. Until next time, be uncommon if you can.